Hello, everyone. Welcome to the lecture. So, today we're going to talk about something really interesting, TSQ, or the sequence. You might have seen it floating around online, those cool looking diagrams and posts about the sequence. But almost no one or very few people actually understand what it really is or how it works in the real market and how to use it in real trading condition. And that's exactly why most traders never dig deep into it because they don't know what it really is. So, in this lecture, I'll explain TSQ in detail and also show you graphical examples and real chart demonstrations. Trust me, once you understand TSQ properly, you will going to love this. You can even call it the missing piece of the puzzle in your trading framework, right? It connects the dots. And just a heads up, this will be a multi part video, probably 2 or 3 parts, where we'll explore the different variations of the sequence and more importantly, where and how to actually use it in live market. Okay? In TSQ, there are about 5 to 6 phases that the market usually move through after a CRT purge. Think of it as the price journey inside a CRT. Now here's the key thing, and I really want you to keep this in mind. Not every time market will show all 6 phases. Sometimes you'll only see two, sometimes three, and on rare occasions, you'll actually get the complete sequence from start to finish. It all depends on how aggressive the market is, how much liquidity is resting, and what kind of environment we're in, whether it's trending or consolidating. For example, in a strong trending market, you might only see a turtle soup and a Model 1 before price expands away. But during a more complex or slower market condition, price might take its time, creating a breaker block, then retracing to the OTE zone, maybe even giving a kiss of death before finally completing the TSQ. So, what you're really learning here is the sequence of delivery, right? How price behaves after purge ACRT. Once you understand these TSQ phases, you'll start recognizing exactly where you are inside the journey of CRT. And that's the real power of TSQ. It gives you structure, timing, and confidence to align with what price is truly doing. So, in this video, we'll go step by step through every phase, break down their purpose, and discuss how to trade each one, from turtle soup all the way to the kiss of death. All right? So the first phase of TSQ is turtle soup, and without it, TSQ doesn't even begin. Remember this, TSQ starts with turtle soup and ends with turtle soup. Now, what exactly is turtle soup? The name actually comes from a little twist on trading history. Back in the 1980s, Richard Dennis and William Eckhart trained a group of traders known as the Turtles. Their strategy was all about trading breakouts, catching the move as price broke old highs or lows, but the turtle soup does the complete opposite. Instead of chasing breakouts, it looks for failed breakouts, moments when price purge old high or low, traps liquidity, and then snaps back in the opposite direction. Think of it like this: the market purged liquidity above a high or below a low. Retail traders jump in thinking it's a breakout, and then price reverses sharply, leaving them trapped or pool. That's the essence of a turtle soup. It exposes those false breakouts and helps us identify where smart money might step in. Now, when you look at this on a real chart, it can get confusing. Like which low is the right one for the turtle soup, right? That's where CRT comes into play. When you zoom out to the higher time frame, you'll notice something interesting. Those old highs and lows that got purged usually line up perfectly with a CRT high or CRT low. So, to make it simple, when the CRT low is purged and price reverses higher, that's a bullish turtle soup. When the CRT high is purged and price reverses lower, that's a bearish turtle soup. This is where TSQ begins. It all starts with liquidity purges and a new cycle forming inside the candle range. All right, so after the turtle soup phase, where the market purges liquidity and traps dumb money, the next thing that often forms is Model 1. Now, you've seen me talk about Model 1 a lot before. It's one of the cleanest and most high probability setups inside CRT, and in the TSQ sequence, it plays a key role. Think of it this way: turtle soup is the trap, and model 1 is the confirmation. If you want to confirm that this turtle soup is valid or not, so wait for model 1 to form. After the CRT purge, the market doesn't just fly away immediately, it usually stabilizes for a bit, creates a specific candle that purges CRT, and that candle becomes our model 1 candle. When price closes above or below that specific candle, depending on direction, that's our signal that smart money is taking control and price is now ready to expand. Let's take an example. Suppose we just had a bullish turtle soup, meaning price purged a CRT low and reversed upward. Now we'll wait for that candle which that purge liquidity or CRT. Once the market closes above that candle, that's our bullish model 1 entry. Same logic for a bearish scenario: purge the CRT high, close below, and that's your bearish model 1. The beauty of this phase is that it gives you a mechanical confirmation. You're not guessing or predicting. The market already showed you that it purged liquidity, and now it's showing you intent. That's model 1. And here's a little advanced insight for you. Sometimes after model 1, the market won't immediately run to your target. It may consolidate or even tap deeper. But that candle, that specific Model 1 candle, usually becomes the heart of the move. It's like the engine of the entire TSQ sequence. So, this is our second phase of TSQ. Let's dive into the third phase of TSQ, which is called the breaker block. After the turtle soup and the Model 1, the next thing the market often does is form what we call the breaker block. Now, this phase is really interesting. Why? Because the breaker block represents the moment when the market exposes the trap completely. It shows you exactly where the dumb money got caught and where the smart money shifted control. Now, when the market breaks structure after the Model 1 phase, this is our true MSS or true market structure shifts. Now, it often comes back to retest the last down candle before the up move in a bullish case, or last up candle before the down move in a bearish case. That candle, the one that originally caused people to enter in the wrong direction, becomes the breaker block. People thinking that this candle purge this short term high and close below, so it's a model 1, but no, it's a fake model 1. Now, when price revisits that area, that's where you'll often see rejection or entry opportunity for continuation. Okay, now let's move on to the next phase, and that's OTE, which stands for optimal trade entry. So, what exactly is OTE? Basically, OTE is that sweet spot where you look to enter a trade after a displacement has already happened. It's not where the move starts, it's where the market gives you that ideal pullback or retracement entry before continuing in the main direction. Think of it like this: after the breaker block or displacement leg is formed, market doesn't move in a straight line. Price retrace back into a specific area. That area is your OTE or 50% zone. Now, how do you identify that zone? Pretty simple. You take your Fibonacci tool from the swing low to the swing high in a bullish scenario, or from swing high to swing low in a bearish scenario. The area between the 60 and 70% retracement is your OTE zone. That's where price usually reacts before continuing the move. But remember, OTE by itself doesn't mean buy or sell. You always need context. Ask yourself, do I have a clear HTF bias? Has liquidity been purged before price retraces into OTE? Do I see a valid model forming inside the OTE zone? When all these align, bias, liquidity, and entry model, that's when your OTE becomes high probability. Now, how to trade it? Once the market done expansion and then retraces back into the OTE zone, you simply look for confirmation on the lower time frame, maybe a CRT candle, maybe a turtle soup, or even a micro model 1 entry. Your stop usually goes below that protected swing low for buys or above the protected swing high for sells, and your target can be the next draw on liquidity or a clear CRT high low. It's all about timing and precision. The OTE gives you a mechanical point to align your trade with institutional order flow, but letting it come to you. And that's what makes the OTE such a powerful phase in the TSQ journey. Kiss of Death, the final phase of TSQ. This one is honestly the most important and also my favorite phase of TSQ. Not just mine, but Romeo's too. And even ICT himself refers to this concept as redistribution. So, what exactly is the kiss of death? It's simply the last turtle soup before the market reaches your draw on liquidity. Let's make it simple. Imagine your draw on liquidity is resting above. Before price actually reaches that liquidity, sometimes the market creates last turtle soup or a fake MSS. That final false move, that last trap before the true expansion, that's what we call the kiss of death turtle soup. It basically signals that the market is preparing to deliver into the draw on liquidity. And same for bearish example. If your draw on liquidity is resting below and you see that last purge or turtle soup just before price drops into it, that's your bearish kiss of death. Many traders struggle when it comes to identifying the ideal model for their entry, especially on the lower time frames. It's one of the biggest challenges, knowing exactly when and where to execute. You might have the right bias, you might even be reading the higher time frame perfectly, but still end up entering too early or too late. That's exactly where the TSQ comes in. It removes the confusion by giving you a structured sequence of clear, rule based entry phases. Each phase in TSQ has its own logic, purpose, and timing, a complete framework that helps you understand how price moves step by step inside the candle range. Now, I'm not saying you need to master all these phases. The key is to focus on one or two phases that resonate with you and really understand them deeply, study how they form, where they appear, and how the market reacts around them. Once you get comfortable with those, you'll naturally start recognizing the rest. The beauty of TSQ is that it's simple but powerful. Once you understand the sequence, it becomes much easier to read price behavior inside CRT and position yourself with confidence instead of guessing or forcing trades. Okay, just a quick heads up before we dive into a real chart example. Let's talk about time frame alignment for CRT and TSQ because this part is super important. Whenever you're studying or trading any model, you need to make sure your top down alignment makes sense. TSQ and CRT work hand in hand, but they have to be applied on the right time frames to maintain precision and context. So here's the simple structure to keep in mind. If you're working with the weekly time frame or you are trading weekly CRT, then your TSQ phases, all your sequence work, should be observed on the 4-hour chart. If your main chart is the daily, then your TSQ alignment shifts down to the 1-hour chart. From 4 hour, you move to 15-minute, and from 1 hour, you go even deeper to the 5-minute chart. This alignment helps you see how the sequence unfolds within the main candle range you're analyzing. It keeps your observation clean, your bias consistent, and your entries more precise. So always remember CRT defines the structure, but TSQ defines the internal movement. Both need to sit in harmony across your chosen time frames. Now, here's something even more interesting. You can also apply TSQ not just inside the CRT range, but also from key level to draw on liquidity, or from CRT high to low and low to high. The TSQ isn't limited to just CRT. It's a framework that maps how price behaves between any two important reference points on your chart. Those reference points could be a key level or even the open high low close structure of a candle. For example, if price is trading inside a daily range and you've marked your high and low, the entire TSQ sequence from turtle soup to kiss of death can unfold within that range. And if price is reacting from a key level and you already know your draw on liquidity, you can still track the TSQ progression from that key level all the way to your target area. In short, the TSQ isn't just about one candle, it's about the journey of price between points of interest, whether that's from CRT high to CRT low, from key level to draw on liquidity, or even using open high low close as a structural reference. All right, now let's put everything together and see how the TSQ actually plays out in real time. Here we have Euro USD on the chart, and this example will help you visualize every phase we've just discussed. So first you can see price has already purged or souped the CRT high. That's our starting point. Remember, once again, the TSQ always begins after a purge of the CRT. Right after that purge, we get our first phase, the turtle soup. Then comes Model 1. This is where structure or sequence starts forming. You'll notice an order block forming right after the turtle soup, and the next candle closes below it. That's your Model 1 confirmation. At this stage, traders who understand TSQ know exactly what's going on. Liquidity has been purged, displacement has started, and now we're preparing to build the rest of the sequence. Next up is the breaker block phase. As price pushes down, it breaks a small internal structure and then retraces back to that breaker. That's your confirmation area. This phase is powerful because it confirms that price is not only reacting impulsively but also building new structure or shift in price. After that, we move into the OTE phase, optimal trade entry. Here, price retraces to the 60% to 70% or 75% fib zone, aligning perfectly with the breaker block and order flow direction. This is where most continuation entries happen. Smart money refuels here before the next expansion. And finally comes the kiss of death, the last and most important phase. This usually happens right before price reaches our draw on liquidity, the final target. Notice how, just above the target, price did one last turtle soup before reversing sharply to complete the sequence. So, from the purge to turtle soup to Model 1 to breaker to OTE to kiss of death to draw on liquidity, you can see how price follows this mechanical, repeatable path. Once you start recognizing these phases live, your confidence grows massively because you're no longer guessing where price might go, you're reading the story as it unfolds. All right, let's take a look at this example on Euro USD so you can see how the TSQ actually plays out in live price action. Now, before we dive in, just remember the TSQ doesn't always show all five or six phases we talked about earlier. Sometimes the market will only give you two or three phases, and that's totally fine. The goal isn't to force every pattern into a full sequence, it's to recognize what's actually there and align yourself with it. So in this case, on Euro USD, we've got just three clear phases: turtle soup, model 1, and breaker. Let's start with the turtle soup, the very first phase. You can see right here, price purge liquidity or CRT height and instantly rejects it. That's your confirmation that the market has just taken out liquidity. This is the moment the TSQ begins. Remember, without the turtle soup, there's no TSQ. The entire sequence starts and ends with it. Now, after that rejection, we move into the Model 1 phase. Here, the order block forms right after the turtle soup. You'll see market close below this specific candle that purged liquidity. That's your first structural confirmation of strength. If you're a Model 1 trader, this is your zone. It gives you that early but logical entry with tight risk. Next comes the breaker phase, the third and final one in this particular setup. After the Model 1 entry, price expands lower, then breaks a small internal structure and pulls back to retest the breaker block. That retest gives the market a chance to refuel before pushing again, and if you pay attention, you'll notice how cleanly price respects that breaker level, confirming that the sequence is unfolding perfectly even with just three phases. So in this example, you can clearly see how the market doesn't need to complete every single step of the TSQ. Sometimes it's short, clean, and direct, like this one. Turtle soup, model 1, breaker confirms continuation, and, and then the market simply moves toward the draw on liquidity. That's the beauty of understanding TSQ. You don't need to predict, you just need to read. Now let's move to another example. This time it's even simpler. In this Euro USD setup, we only have two phases, the turtle soup and model 1. And this is exactly what I want you to understand. Not every valid setup will show a full sequence of TSQ phases. The market won't always print the breaker, reaccumulation, or continuation. Sometimes just the first two phases are enough to confirm a strong reversal and give you a clean entry opportunity. So here's what happens in this chart. The market starts by sweeping liquidity below a previous low. That's your turtle soup. You'll notice price dips just under the old low, triggers the sell stops, and instantly reverses with a strong rejection. The moment smart money uses those retail stop orders to fuel their own positions. Once that rejection shows strength, we immediately move into the Model 1 phase. Here, you'll see displacement to the upside with a clear order block forming right after the liquidity purge. This Model 1 gives you your first valid entry in the TSQ sequence. Your stop goes below the turtle soup low, and your target aligns with the next liquidity pool or CRT high. And that's it. The sequence ends there. No breaker, no reaccumulation, just turtle soup and Model 1. This is what makes TSQ so adaptive. You're not waiting for some textbook pattern that may never form. You're reacting to what the market gives you. When liquidity is purged and Model 1 formed immediately, you have all the confirmation you need. So in this example, TSQ started with turtle soup and transitioned straight into structural strength, Model 1. That's a complete and tradable idea on its own. Simple, fast, and highly efficient. Okay, in this example, we only have two phases active, turtle soup and the breaker phase. Let's go through it step by step. The market first creates a turtle soup, where price pushes just above a previous high, taking out all the buy stops resting there. That's your liquidity purge. Price doesn't hold above. Instead, it quickly rejects and closes back inside the range. That's your early signal that the market is shifting direction. Now comes the breaker phase, which is the real confirmation part of this sequence. Here's how it works. After that initial turtle soup, what's really happening here is that the market is flipping. The same area that once acted as support for smart money entries during the fake rally now turns into resistance. Now, when you identify that breaker block, the candle before the structural break, that's where you look for your entry point. You'll often see price retrace back into that breaker block before continuing lower. That retest gives you a clean and low risk entry confirmation. Your stop typically goes just above the breaker block or the turtle soup high, and your target will align with the next liquidity pool resting below, either equal lows or a CRT low. So in this case, the turtle soup gives you the context. The liquidity was purged. The breaker phase gives you the confirmation. Structure has flipped, momentum is shifting, and you now have a clear zone to trade from. This is one of the most reliable bearish setups you'll see, especially when it aligns with higher time frame bias or a draw on liquidity. All right, in this Euro example, we've got three phases active: turtle soup, Model 1, and OTE. First, we see the turtle soup setup. Price takes out the previous low, grabs the sell side liquidity. That's our first hint that momentum might be shifting higher. Then we get into Model 1. This confirms our bullish trade idea. Now, from here, we're just waiting for a clean retracement. That's where OTE comes in, the optimal trade entry. We draw the Fibonacci from the low to the high of that move, and we look for price to retrace back into the 60 to 75% zone. This is usually where smart money re enters the market before pushing price higher. If we see a clear rejection or small CRT setup inside that zone, that's our refined entry. Stops above the turtle soup low, targets set toward the next liquidity pool above. Simple, clean, and high probability. So in short, turtle soup gives the sweep, Model 1 confirms direction, and OTE gives the entry. In this case, a perfect flow of the TSQ logic. As we wrap up this lecture, remember one thing: TSQ isn't just a model, it's a mindset. It trains your eyes to see order in what most traders think is chaos. The goal isn't to catch every move, it's to understand why the market moves the way it does and to wait patiently for the pieces to align. You don't need to master all six phases overnight. Start small, pick one or two setups, study them deeply, and let experience do the teaching. The more time you spend watching how price develops through these sequences, the clearer it becomes. You'll start to see the market breathing, and that's where discipline comes in. And yes, you'll miss trades, you'll doubt yourself, and that's fine. Every missed setup is still progress if you're learning from it. The market always gives another chance, but it never rewards impulsive ones. So stay focused, stay patient, and stay humble. Your edge is built through time, observation, and discipline, not shortcuts. So let the process shape you into the trader who doesn't chase setups but waits for the market to call them in. I'll see you in the next lecture. Stay consistent, stay confident, and keep mastering your craft. Good luck and good trading.